This is Michael King. In this video, we're going to talk about the four-part valuation that we're going to conduct for Apple Inc. using a discounted cash flow model. We're going to learn how to build this discounted cash flow model from the bottom up, and we're going to break it down into four parts. We're going to be actually using Apple's financials, and we're going to be forecasting sales, the different components of free cash flows to the firm. We're going to calculate the weighted average cost of capital, and we're going to build a DCF model. So this project is going to prepare you for the final team project in this course, which is to write an equity analyst report on a publicly listed company as part of a team, which is great preparation if you plan to pursue either the Chartered Financial Analyst designation or the Chartered Professional Accountant designation. The four steps are going to be as follows. First, you're going to have to download financial data for the most recent fiscal year from Apple's website and enter that data into Excel. Once this data is entered into Excel, it's straightforward to calculate common size financial statements as well as the financial ratios. These are going to be vital for generating our pro forma forecast. Step 2 is going to be to generate that forecast using the percentage of sales method. We're going to forecast all the different items that we need, which are inputs to the free cash flow to the firm used in our DCF model. We're going to do a 5-year forecast because Apple is a relatively mature company, although you could easily do a 7 or a 10-year forecast. Step 3 is going to be calculating the weighted average cost of capital. We're going to have to go and find the inputs to this, such as the market price of the company's stock, the number of shares outstanding, the total quantity of debt and its market value, the costs of equity, the costs of debt, as well as the marginal tax rate. Finally, we're going to complete the DCF model by discounting those future cash flows as well as the terminal value to generate the enterprise value. And from this, we're going to back out what the equity value is and the price per share. It's going to be critical when doing your DCF to look at the sensitivity. In our exercise, we're going to simply alter different inputs or assumptions into our model to see how sensitive our valuation is to those inputs.
Let's take a look at how Apple shares have been trading by going to Yahoo Finance. Apple's ticker is AAPL, and this data is as of May 3rd. Apple is trading at around $289 per share. As the chart on the right shows, Apple's share over the last 12 months has traded in a range from a low of $170 to a high of $327. Apple's current market capitalization is $1.25 trillion US, making it one of the largest stocks listed in the United States. If we were to compare Apple's share price performance over the past 12 months to the S&P 500 index, you will see that Apple has outperformed by a large amount. Apple is the upper line, and its share price has increased by 38% over the past 12 months. The overall stock market is down 3%, largely due to the correction that you see to the right of the figure due to the COVID-19 pandemic. For the first part of this assignment, you'll be going to our Course Spaces website and downloading the Excel template found under May 8th. You will open a file called Apple Assignment 2020 Student. It has a worksheet called Financial Ratios and Forecast. There, you will see financial data has already been entered for 2014 through 2018. You need to add data for 2019. By going to this link, you'll be taken to Apple's Investor Relations website, where you can see all of their SEC filings. You'll want to narrow down the list to Apple's annual filings, and you can see here that the annual report was filed on Form 10-K on October 31st, 2019. Now you can click to read the annual report, or you could download just the PDF file or the Excel spreadsheet. This link opens up the Form 10-K, which is the annual report for Apple Inc. It's a large document that contains a lot of information. It contains the same information as an annual report, such as a discussion of the business, the risk factors, and the management discussion and analysis. You're going to want to go down to the financial statements, which is item 15. There you will find the income statement, the balance sheet, and the statement of cash flows. Let's take a look at the income statement. As you can see, financial data is reported for the past 3 years. You'll want to take this data and use it to populate the cells shown in blue in column H. You'll enter information for both the income statement and for the balance sheet. Once you've done that, you'll want to go to the right and complete the common size financial statements. There is both an income statement and a balance sheet. A common size income statement will show you all items as a percentage of sales for each individual year. The balance sheet will show you all items as a percentage of total assets for each year. The figures for 2014 are already shown, and you'll need to calculate the numbers for the next 5 years. Once you're completed this part, go further down and start completing the financial ratios, which are categorized under a number of different categories. First, we're going to have to calculate net working capital, which is used in our DCF model. Then we'll get to the efficiency ratios, liquidity. We'll look at sales growth and margins, profitability, and the DuPont decomposition. Credit statistics or leverage, followed by market multiples. Once you've completed all of these items, save the spreadsheet under your name.
So that's it. You've now built a 5-year discounted cash flow model from scratch for Apple. Now that you've built this model, ask yourself, does your valuation make sense? How does the intrinsic price from your model, or the range, compare to Apple's current share price and its 52-week range? Does Apple appear to be overvalued or undervalued based on the assumptions that you've built into your model? Normally, we would ask you to run several scenarios and weight them based on their expected probability in order to understand whether you think Apple is overvalued or undervalued. In any case, take a look at your numbers and ask yourself, is Apple a buy, a hold, or a sell? Please look for future instructions on the course website for how to submit this assignment. Good luck!